Hello, good morning, everyone. We are from the second group. We're going to present to you our collaborative learning result from week 8 to week 9, and we're going to correlate it with the Garuda case. But before we move into the materials, we're going to introduce ourselves. My name is Halia Nafa.
My name is Sharifah Sazida.
My name is Sally Mariani.
My name is Zahira. My name is Selin Chandani.
And my name is Teresia Niki.
Okay, so here's our outline for today's presentation. The first one is the 5-step models for revenue recognition in PSAK 72. And the second one is the 5 steps model application. The third one, analysis on Garuda case and conceptual framework. And last but not least is analysis on Garuda case based on PSAK 72.
So the first one, I'm going to explain to you about 5-step model for revenue recognition in PSAK 72. The first step is identify the contract with the customer. The new revenue guidance defines a contract as an agreement between two or more parties that create enforceable rights and obligations. Standard setters identified the attributes below as essential parts of a contract. All parties have approved the agreements. All parties are committed to fulfilling their obligations. Each party's rights are identifiable. Payment terms are identified. The contract has commercial substance and collectibility is probable. The second step is identify the separate performance obligations in the contract. A performance obligation is a promise to transfer goods or services to a customer. The standard directs entities to consider performance obligations that are explicitly outlined in the contract, as well as any obligations the customer may expect because of established business history. The issues may affect an entity's evaluations of performance obligations are principal versus agent, warranties, customer option for additional goods and services, non-refundable upfront fees, and right of return. The third step is determine the transaction price. The transaction price is the amount of consideration an entity expects to be entitled to for transferring promised goods or services. The consideration amount can be fixed, variable, or combination of both. The transaction price is allocated to identified performance obligations in the contract. These allocated amounts are recognized as revenue when or as the performance obligations are fulfilled. The fourth step is allocated transaction price. When a contract includes more than one performance obligation, the seller should allocate the total consideration to each performance obligation based on its relative standalone selling price. The seller must estimate the standalone selling price if it's not observable. ASC 606 does not prohibit any method for estimating the standalone selling price as long as the estimation is an accurate representation of what price would be charged in a separate transaction. The standard thus mention three acceptable methods. The first one is adjusted market assessment, the second one is expected cost plus margin, and the last one is residual. These methods are discussed in standalone selling prices. And the last type is recognize revenue when or as performance obligations are satisfied. The final step in applying the new revenue recognition standard is to recognize in the contract are satisfied. For performance obligations that are fulfilled at a point in time, revenue is recognized at the fulfillment of the performance obligation. For performance obligations satisfied over time, an entity must decide how to appropriately measure the progress and completion of the performance obligation. A performance obligation is satisfied when or as control of the goods or service is transferred to the customer.
Now I'm going to explain about the 5-step model application. Here is the sales agreement between Josh and Julie. At the sales agreement, it states that the seller will sell, transfer, and deliver to the buyer on or before 28th day of October 2015 the following goods: one treadmill model number 9X765. The buyer will accept the goods and pay for the goods with the sum of $250. The question is, when will the seller recognize the revenue? So here we use the 5-step of revenue recognition in PSA K72. The first step is we should identify the contract with a customer. In this case, Josh has signed a contract to deliver the treadmill model number 9X765 to Julie on or before 28th of October 2015. The second step is to identify the separate performance obligation in the contract. For this case, it only has one performance obligation, which is to deliver the treadmill model to Julie. The third step is we should determine the transaction price. At the contract, it clearly states that the transaction price is $250. The fourth step is we should allocate the transaction price to the separate performance obligations. Because at this case, there's only one performance obligations, we could easily allocate the transaction price to the one performance obligation. The last step is we should recognize revenue when or as each performance obligation is satisfied. So, Josh could recognize revenue after he delivered the treadmill to Julie.
The next section will be about the analysis on Garuda case based on conceptual framework or KKPK, which is the abbreviation for Kerangka Konseptual Pelaporan Keuangan. The audit of the Garuda Indonesia financial report recorded a number of findings. One of them relates to the financial engineering. Garuda was said to have listed receivable as its income in the company's 2018 financial report, where two of the BOC, which is Hairul Tanjung and Doni Oskaria, refused to sign the report. So here is a brief case summary of Garuda Indonesia scandal. As I've said before, the issue first rises when two commissioners rejected the 2018 consolidated financial statements, where one of the reasons is the violation of PSAK 72 regarding the revenue recognition within the financial statement. Garuda Indonesia should have recorded a loss of 345 trillion rupiah instead of a profit of around 70 billion rupiah. So here's the chapter 1 of the KKPK, which discusses the purpose of financial reporting, paragraph 1.12. Paragraph 1.12 states that the general purpose of financial statement is to provide information about the entity's economic resource and claims against the reporting entities. It also provides information about the impact of transactions and other events that affects the economic resources and claims of the entity. This information provides useful input for decision-making regarding the provision of resources to the entity. So the objective of the financial reporting is to assist decision-making for interested parties such as investors, creditors, government, and others. The information regarding the nature and amount of an entity's economic resources and claims can help users to identify the financial strength and weakness of a reporting entity. So the fact that the airline turned losses of around $200 million in 2017 to a net income of $810,000 last year proved that Garuda Indonesia failed to comply with the underlying conceptual framework, Chapter 1, Paragraph 1.12. The next one is from Chapter 4, which discusses the elements of financial statements. Paragraph 4.3 states that if one party has an obligation to divert economic resources, then the other party have the right to receive economic resources. However, the requirement for one party to recognize liabilities and measure them at a certain amount does not mean that the other party must recognize the asset or measure it at the same amount. This means that even though Mahata recorded a liability of $240 million in its financial statement, it doesn't mean that Garuda Indonesia needs to record a revenue of $240 million aggregately at once too. Gitu. Garuda Indonesia needs to refer to the underlying accounting standards in Indonesia when measuring and preparing the financial statements.
Next, regarding the chapter 5 of the conceptual framework, it mentions about recognition and derecognition. And in the paragraph 5.16, if the probability of an inflow or outflow of economic benefits is low, the most relevant information about the asset or liability may be information about the magnitude of the possible inflows or outflows, their possible timing, and the factors affecting the probability of their occurrence. Then the typical location for such information is in the notes. And in the Garuda Indonesia cases in the agreement between Garuda and Mahata, there are no details governing the consequences if the parties do not carry out their obligations. Therefore, the probability of economic benefit inflows can be set too high, and information about this revenue must be mentioned in the notes to the financial statement. Next, still in the chapter 5, in paragraph 5.18, it states that recognition of a particular asset or liability is appropriate if it provides not only relevant information but also a faithful representation of that asset or liability and of any resulting income, expenses, or changes in equity. In Garuda Indonesia cases, they recognize their revenue from Mahata for 239.94 million US dollar, even though Mahata haven't paid that revenue. And without those recognition, Garuda would incur loss for 244.95 million US dollar in their book. Thus, Garuda shouldn't recognize those revenue because it will not provide an accurate representation of assets and liabilities.
Okay, so we're on the last section, which is analysis on Garuda case based on PSA case 72. So basically, what is happening in PSA case 72? The objective of the revenue standard is to provide a single comprehensive revenue recognition model for all contracts with customer to improve comparability within industries, across industries, and across capital market. Okay, and sometimes we're wondering what is the difference between the PSAK 72 and PSAK 23. So basically, the PSAK 72 specifically regulate for revenue which generate from contract. Meanwhile, the PSAK 23 regulate revenue in big definition without specific meaning of where the revenue was generated. Okay, so here's the flow chart of the revenue recognition based on PSAK 72. So basically, revenue can be recognized in two terms. The first one at a point of time, and then the second one, we can recognize revenue over time. But if it doesn't meet the criteria over time, revenue is recognized at the time of transfer control. And here are the criteria to recognize revenue over time. The first thing is that we need to check whether or not the customers simultaneously receive and consume benefits provided by the entity's performance when the entity carries out the obligation. That was based on the paragraphs PPO3 until PPO4. Okay. The second one is to check whether the entity performance creates or increase assets, for example, work in progress, that is customer controlled as an asset created or improved. That's based on paragraph PPO5. And then the last thing that we need to check is whether or not the entity performance does not create an asset with alternative use to the entity, and the entity has rights which can be forced for completed performance payments until a certain date. Okay, that was based on paragraph 36 and 37 on PSAK 72. Okay, now we need to take a look on the contract with PT Mahata. The Mahata agreement was signed on 31st October 2018, but until the 2018 financial year ended, no payment had been made by Mahata, even though a unit of equipment had been already installed at the Citylink airplane. Secondly, the Mahata Agreement does not contain a clear term of payment, even though the method of payment is still being negotiated. Until now, there is no guarantee of payment that cannot be withdrawn, such as bank guarantee or an equivalent financial instrument from Mahata to the company. In fact, a bank guarantee or an equivalent financial instrument is an instrument that shows Mahata's capacity as a bankable company. Mahata only provides a statement of commitment to payment of compensation in accordance with the last paragraph of page 1 of the Mahata letter March 2019, which state, this payment scheme and condition will still be subject to the conditions stated in the agreement. Terms and payment schemes are as stated in this letter, and the agreement may change with reference to Mahata's financial capabilities. In this case, changes will be made. Mahata will provide written notice no later than 3 months before the effective date of the new payment terms and schemes. In the Mahata Agreement, there's also an end to the article stating that Citylink can terminate at any time for business reasons. Recognition of income from the Mahata Agreement by the company amounting to $239 million is a significant amount, which, if without recognition of this income, the company would lose approximately $244 millions of US dollars. As for recognizing revenue from the Mahata Agreement, the company posted a profit of $5 million US dollars. The company recognizes revenues and receivables from PT Sriwijaya Air in the amount of 20 million US dollars plus VAT in the amount of 2.8 million US dollars, which is part of the company's profit sharing, which PT Sriwijaya Air has not received payment from Mahata.
My colleague at the very first start already explained to you about 5-step model in PSAK 72. So here we are going to relating the 5-step model to the Garuda Indonesia case related with Mahata. So here we have step 1, which is identified the contract with the customer. So there are about 6 criteria from the standard setter, which is really essential for both parties concerned. First, we have all parties have approved the agreement. So we classified this as yes, because the agreement from Mahata and Garuda is signed at 31 October 2018. And then this is also conclude all parties are committed for fulfilling their obligations, and then each party's rights are identifiable. And then the next one is payment terms are identified. We classified as no because the Mahata agreement does not contain a clear term of payment. So this is classified as no. And then the contract has commercial substance. Yes, of course. And then the next one is collectibility is probable. So here we stated as no because until the last year of 2018, the Mahata itself hasn't given the payment to Garuda. So the analysis for step 2, which is identify the performance obligations, it is talking about 5 criteria, which is some of them are not announced in the article that we already read before. First one is gross versus net, and then customer options for additional goods or services, and then the last one is right of returns. Actually, for right of return, we are knowing that Citylink can terminate any time for the contract, but we don't consider it to be right of return because this is only the terminations. After that, the warranties are not allowed, and then refundable for upfront fees are not allowed to. So this is why our criteria like this. And then the next one is the transaction price. As we can see from the case, the transaction price between Garuda Indonesia and Mahata was $239.94 million US dollar, or when it converted to rupiah, it becomes 2.9 trillion rupiah. So this is to be the transaction price of Garuda and Mahata. The next one is allocated the transaction price. This is we considered as no because there is no more than one contract performance obligation. So this is only one performance obligation, so there is no allocated transaction price. So the next one is recognize the revenue when or as revenue the performance obligations are satisfied. We classify this as no because until the last year, until 2018 fiscal year ended, no payment has been made by Mahata. So this cannot be classified as revenue for Garuda Indonesia since it wasn't paid yet. So the conclusions, based on PS AK 72, this transaction should be recognized over time. It can be classified as revenue, and as the replacement, it should be classified as unearned revenue, which is treated as liabilities. The next one, the impacts of recognizing the revenue. First one is misleading financial statement. As we can see, there is can be generate profit rather than loss, but actually Garuda itself is accruing loss at that time. And then the next one is damage Garuda credibility. This is of course accruing Garuda since Garuda is a national airline, so this is really affecting the credibility of Garuda. And then the last one is cash flow burden for Garuda. The cash flow burden is relating to the tax, which is actually income tax or value-added tax should be paid at that time, but they must pay because they have profit. So so that's all for our presentations. If you have any questions, you can comment below, and thank you.